Hi folks and welcome back. In this video, we're going to talk about retirementodds.com in advanced mode. This is where you'll go to get the ultimate in detail for the most accurate results in your retirement plan. We assume you've already tried simple mode and watched our simple mode video, and that you now understand the basic concepts. In advanced mode, we'll get into things like real estate ownership, healthcare expenses, loans, and other things. In advanced mode, you can have any number of assets or cash flows declared, and each can come and go at different dates and with different rates. Advanced mode should get you most of the way toward the most accurate result possible. So let's get started. We'll start off right where we left off in the simple mode video, with a result based on our simple mode inputs. From here, you can scroll to the top and click on the advanced mode button, or just click the link that shows right under your result value. You'll be offered a chance to carry over your inputs into advanced mode, or to start clean. Let's carry over our inputs to make things easier. Now here we are in advanced mode. Like simple mode, it's broken down into collapsible sections, and you can click the plus sign to expand or collapse each section. Inside each gray-colored section, there are purple sections for each account or declared cash flow of that given type. There's a Collapse All button next to each major section and each intersection to quickly take you back to a high-level view. In the Basics section, you give your plan a name and enter the relevant ages for you and your spouse. Leave the Spouse section blank if you're single. And note that we don't ask for your spouse's retirement age because there can only be one retirement year, the year when your savings stop and your withdrawals begin. You'll see here that some of the inputs are grayed out. That's because we came from simple mode, where we already had some assets defined. It's a minor limitation of this tool that once you start defining assets and cash flows, you can't change your ages, because the other sections need to know your ages in order to check for errors in their year inputs. Likewise, you can't define any assets until you first enter your ages. Here, you'll also choose your state of residence for retirement, so we can compute your state taxes. If you're outside the USA, there's an option for that too, but it will cause the calculator to skip the automatic tax expense calculation altogether, meaning that you'll need to estimate taxes yourself and include them as an expense. And finally, declare the amount, in today's dollars, that you want to leave to your heirs, and the calculator won't let your funds go below that number. By the way, note that each input has a little question mark icon next to it, which will pop up some handy help text. The next section is Default Growth Rates. Here you'll tell the calculator how your money will change over time, or at least the default values for these rates. You'll have the option to override them later in each individual cash flow. You enter numbers here for inflation as well as return on investment and standard deviation, which are explained better in the simple mode video. Remember that to choose the best numbers here, we recommend backtesting your own portfolio using a website like portfoliovisualizer.com. The return on investment is one of the key drivers of the success or failure of your plan, and standard deviation, the volatility of your portfolio, is what gives your plan some random behavior to simulate the real stock market. Lastly, if you will be entering real estate investments, you can check the box and enter separate appreciation rates and standard deviation for the real estate. By the way, notice also the collapsible About This section bullet at the top. Open this for more information if you so desire. In the next 4 sections, we'll ask you about all the liquid assets, real estate, spending, and income components of your plan. We'll start with liquid assets. Here you'll see that there are already some assets predefined that were carried over from simple mode. You may delete any of these if you wish with the Delete button, and create new ones with the Add button at the bottom. In advanced mode, you're asked for a little bit more information about your assets, depending on their type. For example, if you're expecting an inheritance down the road, you can check this box and enter the future date you expect to receive it. It won't be considered a spendable asset before this date. Like in simple mode, we need the account value for taxable accounts broken into unrealized capital gains and cost basis, And also, we give you three options for how to treat the gains for tax purposes: long term, assets held more than 1 year; ordinary, for example, most dividend income, or roughly half and half. Making the best choice here will make the tax calculations more accurate. This last checkbox is for if you want to use a return on investment for this account that is different from the default. If so, just check the box and fill in the different values. Keep adding as many assets as you wish. We suggest perhaps one for every account that you and your spouse have, so you don't have to do any math. The next section is real estate. First, we'll add our primary home. Then we'll add a rental property. You have several checkboxes here which will open up additional inputs depending on the situation. For example, you can add a home that you plan to buy in the future and specify the year. And you can override the default return on investment, just like with assets. Then you can enter your mortgage information, and the mortgage payments will be treated as an additional expense in your plan for as long as you hold the mortgage. When you add a rental property, you have all the same options plus a few more. For a rental property, you need to enter your rental cash flows, i.e., expenses and rental income, as well as the rate at which these will grow. These are factored into your annual expenses and/or income. And there are two future sale options, both of which are also available for your non-rental properties. These allow you to declare a future year when you plan to sell the property or elect to have it sold by the calculator in any year when your plan needs access to the equity in order to survive. If you check one of these boxes, then it is assumed the proceeds from the sale will be invested, and you're given the option again to override your default return on investment for these proceeds. And finally, for a property that will be sold, you need to provide some additional information for tax purposes, i.e., the purchase price, improvements, and real estate sales commissions. The net proceeds from a real estate sale are treated as long-term capital gains. Please note that depreciation deductions are not currently factored into the tax computation. The next section is your spending, which again has a pre-filled component from your simple mode carryover. There's a couple interesting things to note here. First, you have selectors for both the start and end year, so you can define any arbitrary spending to exist for only a portion of your retirement years. For a one-time expense like the purchase of a new home, just enter the start and end years the same, and make sure to enter its value in today's dollars, even if it is a planned future purchase. Note, the year selectors have bulleted years for specific milestones, which is useful for later if you use what-if mode, because the effective year will float as that year is varied in what-if mode. This might be difficult to comprehend, but we'll discuss it more in our what-if mode video. You can also add more spending components here, including two special types: health insurance and installment loans. Health insurance is a handy shortcut way of specifying all your health insurance needs from before Medicare kicks in, as well as after you are Medicare eligible for both you and your spouse. You can think of it as just four separate general spending components, each with different start and end years. And as always, you can override the default inflation rate, since history tells us that health insurance costs rise faster than normal inflation. Installment loans, such as car loans, are another expense that hopefully don't last a lifetime. When you add one of these, you're asked for the loan parameters, and the annual expense and duration is automatically computed. The final section is for retirement income. There are two types you can add: Social Security and other income. Here again, the Social Security form is just a shorthand for what could otherwise be other income, but with specific start dates. Also, the tax calculator assumes only up to 85% of Social Security is taxable. Other income is for things like pensions or part-time retirement jobs. Here you have the option to declare the full amount as non-taxable if you wish. And again, like everything else, you can change the start and end years and override the growth rate. Note that the Social Security form doesn't account for Social Security survivor benefits, wherein a survivor can start receiving their spouse's larger benefit upon their death. But that's no problem. You can just delete the Social Security form and enter these income streams as other income and use the first spouse death plus one selection to indicate when the survivor benefits kick in. Okay, whew, that was a lot of inputs, but now we're ready to calculate. But wait, there's one more thing. In advanced mode, you can save your work as a file on your computer. We recommend doing this first, before you calculate. Just click the Save button and download the small encoded text file to your computer. When you come back later, use the Load button to pick up where you left off. Now press Calculate My Retirement Odds, and voila! You have just about the most detailed estimate of your retirement odds that is possible. You can also explore the same charts that we discussed in simple mode, so we won't go into those here. Note that with real estate sales defined, you might see some interesting things in the charts in the years where you sell your real estate. Doing so can have big tax implications. Well, as you can see, there's a lot to advanced mode. Retirement calculations can be complex, but we've tried to give you as much flexibility as possible. Now it's up to you to decide what odds you are comfortable with before you pull the trigger and start living your best retirement life. Personally, I like to see 80 to 90%. Just remember, nothing is for certain, and this is something you should monitor throughout your whole retirement life and be prepared to make spending adjustments if necessary. We welcome your feedback on this site, and you can supply it by just clicking the Feedback tab at the top. Also, if you like this tool, a donation to help support our hosting costs would be much appreciated. Just click on About Me and follow the PayPal link to donate as much or as little as you like. Thanks for coming and happy retirement trails.